Welcome back everyone to another technical analysis, and it's been months since the last time we did any kind of videos, but now we settled in, so let's get started. Basically, today, as mentioned, we are taking a look at the K coin and wanted to start with the bigger time frame or the overall, where last time price was in its peak areas was of course the previous all-time high during the bullish market. Now, as everyone was expecting the bullish market and the break of this upper side support area, sorry, the resistance, let's just put it at error like that and inside. So, as everyone was expecting to see a breakout from this area, what actually happened was price just kept itself inside the sideways channel, and we've been just gliding from upper side to lower side. Now, as price is near the local bottom area of the sideways channel, the most logical movement from here on would be, of course, a bullish movement to the upper sides. But lately markets don't like the logics, so there is of course a chance that we just will keep on dipping. But for this kind of scenario, we would need to see a proper breakout structure near the local support area, so the S sign here. In this case, what we need to see is going to remove these ones here. So ideal downside movement would be a breakdown here, proper retest, so not any kind of just a liquidity movement, then just gliding, and then movement. Now, two areas where we can take short position in this case would be firstly this area here, because if price would just tank down, it can tank the same way, just up as a liquidity grab. But in this case that we are showing here, we have the breakdown, we wait for some kind of retest. If there won't be a retest and price just keeps on tanking, then we would not enter, potentially even miss the good short position, but rather not to enter at all. So would wait for the retest, then a confirmation of break of structure, and then glide the trend to the lower zones with stop loss being, let's say we enter here, we move down, this is the stop loss, bam, price goes in, here is another break of structure area, so this one here. I'll take the brush just. So we have another break of structure area here, then stop loss would be here, would be just here. If we see some kind of reversal happening, then trade is closed. But this is the downside movement that we are expecting as of now, if we see the breakdown. Now, as long as there is no breakdowns, the only logical movement for us is just up. But if we look at the economics of the markets right now and overall the cycle, there is no logic behind prices to push actually hard up. The only logic would be if we have a new world order and prices and everything would just shift from one currency, so cash, the banking system, into the cryptocurrencies. But I'm not sure how well this might go this year. So anyways, what might happen is upside movement. The risk reward ratio in this case is more than good, and if we check just at overall picture on the daily time frame, I'm not sure who would say that the Pancake swap coin should tank more to the lower zones. Let's be real, people still use it on the daily basis, the Cake coin and the platform itself, so the most logical thing would be to move to the upper zone. So risk reward ratio in this case is basically 1 to 10. For the spot holding, this is the most ideal thing in my personal opinion, and if price would keep tanking, we would be topping up, and the downside movement would be more of like a leverage trading on the smaller time frames. Now, before finishing the video, going to go to the hourly time frame, just to point out one thing that some of you have been asking us. which is the CME gaps and why do we like them so much. Basically, if we look at the history, so going slightly back, we see that the CME gap filled, CME gap left unfilled, eventually got filled in this region, basically took a week, filled, filled, again filled, here, here, and basically everywhere. Some take immediate action to fill, some take much longer. For example, this one here took very long. Now, even this one here, if we look on the bigger scale, eventually price just fills those areas. So what we think is all the bullish CME gaps here. So this one, let's see where's the more, or there might not be any, I think. Oh no, here's the one. Here's the one. And that's about it, I think. Yeah, so eventually I think those two areas would be filled, and those would be also the first target for the bigger time frame. So CME gaps act as some kind of magnets and they tend to be filled, so I would definitely keep an eye on them. We've been using them for the past 2.5 years, I think, and for us they work pretty great. So anyways, expecting the Pancake swap coin to show some kind of buy side movement here, as long as buyers keep the support area secured. So anyways, that's it for today. Thanks for watching this video and see you tomorrow.